Three little known factors that can affect your portfolio, and this is about the Quandrel stock guide, Ken Boyd from Accounting Accidentally. So this is a recent blog post. I'm going to scroll up to the top. And I saw something interesting the other day I'd never seen before. There was a flatbed truck driving through an intersection, and the intersection was on an uphill slope, and I was coming out of a grocery store on a hill a little bit above this busy street, and I noticed that the guy started honking as he went through the intersection just like an emergency vehicle would. And it struck me that the reason that he did it was because of the hill. The people who were coming from the cross streets, the cross traffic, really couldn't see him very well, and obviously the guy knew the intersection and was honking as a precaution. And so I make the point here that he was using his wisdom to get better results. And I think we've got a good example of that in this Quandrel stock market guide. And you'll see down here to the right, they have a table of contents, and I found that there was some very useful information in this report. Three basic things that I thought were really important. The first is free stock quotes. You get what you pay for. Now, I think it's great that we have lots of different ways to get a stock quote. However, if you're a money manager and you need more precise pricing, those free stock quotes are not always accurate. And I use the example of a stock trading on multiple exchanges. For example, IBM over here. This is the NASDAQ page. You can see that NASDAQ is an exchange where stocks are traded. It trades IBM. But the stock IBM also trades on the the NYSE, New York Stock Exchange. So one thing to remember is that stocks trade on different exchanges. And if you're managing a mutual fund and you need to sell 100,000 shares of IBM and you need to precisely know what price you're going to get, the free stock quotes will not be good enough. So that's an important thing to remember. Free stock quotes are okay. We want to know generally where the stock price is, but probably not good enough for a professional trader. Second thing that I thought is great is that standardized rules make data comparable. The SEC requires all companies that sell shares to the public to have a basic structured set of disclosures to investors, including audited financial statements. And those audited financial statements cover generally accepted accounting principles, which require consistency. Inventory and other assets are generally recorded at historical cost. We've got to be consistent as to how we recognize revenue, and on and on and on. So that makes things comparable. So I make the point here at the bottom that let's talk about EBITDA, earnings before interest, taxes, depreciation, and amortization, which I define over here on the great Investopedia site. And they give you a formula over here as to how you calculate it. The point related to this is that if two companies, a $100 million in sale clothing manufacturer and a $1 billion construction company, are reporting using EBITDA, those numbers are comparable because they're using the same set of rules. And I think this stock guide really goes into detail in a great way about how standardization makes data comparable. If you're an investor, you can compare different companies and know that they're using the same set of rules, and if they're not, those disclosures will be in the footnotes. And finally, as I've said repeatedly through lots of blogs, what you're really buying when you're buying a stock is the ability to earn money, an earnings machine where you put capital into the Play-Doh machine, you turn the crank, and just like the Play-Doh machine, earnings come out the other end. So you're buying a stream of earnings. And in fact, one type of stock analysis takes the net present value of cash flows, adjusting them into today's dollars, and adds them up and comes up with a value of the stock. And net present value specifically takes cash flows, meaning cash dividends you get as an investor and any other distributions, and discounts those cash flows into the future that are being paid in the future back into today's dollars. So the earnings machine concept, I think, is important. So I do recommend this Quandrel stock guide. It's out on the quandrel.com site. You can see a link on their site. You can also see a link right here, and I think that's very valuable to investors. And remember that I also offer other free things on the site, um, different things you can download if you choose to. You can also click on buttons and get them, the free reports, and also the live webinar, 10 personal finance mistakes and the tools to avoid them. So there's free things on the site to help you. There's also embedded links in all of my other blog posts, the most recent of which you'll see down here. Thanks very much for watching.